21 stocks that can endure higher borrowing costs and are pretty stable. So what are they? According to Goldman Sachs, these are the names. Let's go through them and see how I rate and rank them. By the way, don't forget to follow, repost, subscribe, all those lovely social media things. Send a hug as well while you're at it. Why not? Now, starting off with Cisco, one that I've particularly liked. You can see, by the way, with all of this, I'm going to share with you certain data on the fundamentals, like the price-earnings ratio. You want that number to be as low as possible. Ideally, it's an oversimplistic examination of it, but that's what you ideally want. And I'll also share with you the charts, some of the momentum, what the analysts at the banks are saying as well. You can see that. And also seasonality and performance for each of these. So strap in. You might want to take quite a few notes of all of this. Like I said, you got the banks and what the analysts are saying. Now, what have we got here? This really in this direction, and it's been doing that before, but it's falling off at the moment. It's not one that I'd get in right now because the momentum looks neutral. That's the MACD. That's the stochastic. For those of you who don't believe in it, well, have a look at what the banking analysts say. That's pretty neutral. Have a look at price earnings. Cheap, but still not one I'm looking to get into. And by the way, it's net leverage why Goldmans think these can withstand higher interest rate costs, because they're not very levered up. They've not got much borrowing. That's the reason. That isn't the only reason why, of course, a company's share price might go up. Trailing price earnings, a bit expensive on Costco, one that I do own, and you can sort of see why. There's the direction it goes in. Everybody seems to like it, and virtually every month it tends to do well. It's a bit neutral at the moment. That's headwinds right at you. There's a lot of wind coming this way, trying to push it backwards. Paychecks, okay, very little leverage on that one. And you can see the support that it's got over here. But what it really needs to do is do this to get everybody's interest. I'm afraid not one that I particularly like. Look at all those holds and sells on that. And it's still sort of inclining down. I'd want to wait a bit before looking at this. I mean, potentially, if it went to a high, you'd look at about a 30% rise in it, but not one that at the moment makes me excited. Cadence is one that I've liked in the past, and you can sort of see, by the way, we've also got profits over here, 10-year EBITDA, interest coverage, but again, net leverage is the real reason. And this looks a little bit pricey. Let's just have a look at this. A full house there. If you're playing poker, you've got a royal flush, which is the best. So a bit overbought though. And it's going to go within this range, which is not a bad range to move in. I mean, it'll probably drop here before going up that way. So overall, one that, not too bad, actually. Cognizant really needs to do something like this. It's a bit more neutral is this one, and I'm going to stay too neutral on it. If something's neutral, I'm not going to look to get in 50% to the upside potentially, but I'm not too excited about it at the moment. Visa. Now, it did sort of break out from the upside, but it's done that before and then moved back in. And my fear with this is it'll probably do this. Again, a bit neutral. It was looking a lot more attractive at the start of the year, of course. And since when it did go from, about 200 to 230, so a 15% rise, and then sideways again. So afraid I'm not getting too excited about that one either. Fastenal, again, numbers are not too bad. That tends to be the growth angle, which it's exhibited in the past, but there's just too many headwinds on this one as well, and momentum looks sideways. So I can't see something which makes me think, yes, definitely. Automatic data processing, again, I can see that support. Yes, I can see the argument would be that it's meant to go up here, but not enough from the bank analysts, and certainly the direction of momentum, not enough to make me excited. Snap-on. Okay, boom. Is it going to do that again? Well, it's gone this way. Can it resume? That's a bit overbought. So I'd rather wait and see. This isn't too bad, what the analysts and the banks are saying, and certainly this time of year isn't too bad, but I got to wait. BlackRock, lots of reason to be positive. Such a big company. Yet, what have we seen with it? Oh, there's people at home. What have we seen with BlackRock? It's gone from near 1,000 to 600, so about a 30% drop over the last couple of years. And there'll come a time when it'll probably go back up again that way, and certainly the analysts and the banks think so. I'd rather wait. I'm afraid. Cardinal Health, one to keep an eye on though, obviously. Cardinal Health, well, look at that. Now that's a bit more interesting, isn't it? And these all saying continue holding it, but it's a bit overbought, so not yet. Jack Henry, well, yeah. Well, sorry, Goldman Sachs, I'm not going to agree with you on this one. Again, I'd rather wait. I know it's oversold, and the argument would be this, and it might be able to withstand the future tremors, and it is near the bottom end of this range, and if it were to go back to the top, you'd be looking at getting about a 75% return, but I'd rather wait. Johnson & Johnson, big bellwether, but again, look, it's at that support, it's at the bottom end. Is it supposed to bounce up? I oversold as well. Looks attractive potentially, but I'm waiting. I'd rather wait before getting in. And by the way, if you look at my Telegram channel, have a look at alpeshpatel.com/links. You'll see I update some of these bellwethers. Now, CME is one that I like. I've done a little projection for you. So there you go. Even though some of the banks are not all necessarily always happy. JB Hunt Transport Services. You can see the argument I'm going to make here. It's near the bottom end of the support. Yes, I can see that's the case you'd be making. And that's a little bit oversold. But I'm afraid I'd be waiting. You know, I'm tight with my money. I'm not going to just give it away anywhere. Now, fear as it goes there. The argument would be that it goes in that direction. Look at all those saying buy, buy, buy. And it's a little bit neutral. So I'd need a more compelling case right now to get into something like MasterCard. Rollins, I'd need a compelling case to get into this right now because it's in the middle of there. That's a bit neutral. And yes, these are all buys, but yeah, it doesn't give me the excitement. IDEX, it's fallen off a fair bit. You would be looking at it getting back to those levels that it once was at, which would mean a 70-75% upside. Sideways and neutral for the moment. So I'm waiting, even though well set up because the banks seem to like it, and seasonality wise doesn't tend to do too badly into the new year. But you know, new year is when I'd probably revisit it rather than jumping in right now. McKesson has done as well from in the past. You can see it there. That was one great window, and again this year done well. It's sideways here, so just be a bit careful. It's a bit overbought. I know all the banks and everybody seems to love it, but as long as this trend continues, that's fine. It'd have to be based on that trend, and you'd have to say, well, I'm going to get out if it breaks beneath that trend. So you've got to be a bit cautious with that one. Amatec, that direction is what we're looking at. Oh wow, look at all those buys. Definitely worth somebody's interest there, but bit sideways, bit overbought. Again, given the broader market conditions, one I'd keep an eye on, but not one I'd want to jump into right now. And I know that sounds like a broken record, but something's really going to have to get me very excited for me to get on right now. Amphenol, that's what you're saying, and it's done that kind of angle of growth before. Quite a few buys, neutral. It's almost exactly halfway, so you can't read too much into that. These are some of the ones which I'd filtered in the past. So that's where we are with it. Like, as I said, really right now in this kind of market environment, I am far more a wait and watch kind of guy than somebody looking to dive in. Hopefully you found that useful. Don't forget alpeshpatel.com/links for more. And also check out my campaign for $1 million.com. You'll get a lot of free materials there as well.